and let's welcome Rui Ming to be here. Right. Okay, Rui Ming.
Hello, hey everyone. Thanks, Chloe, for having me. Great to be here and chatting with you guys and to be sharing my journey and also my own 2 cents on Tesla or any other investing topics that we may be chatting about.
Fantastic. Thank you so much, Rui Ming, for taking up your time as well. And because of the sudden technical difficulty, we have to suddenly switch to Zoom. But regardless, I think Zoom is even better because you literally get to ask Rui Ming question directly. Now, maybe Rui Ming, we can start off by letting our audience know a little bit more about you, right? And letting me know a little bit more about you as well, right? Can you share with me a little bit about your investing journey, how you get started, and how you managed to achieve where you are today to be like quitting your job? And
I've been investing for about 10 to 12 years now, but of course, like as a full-time investor, maybe only the last maybe 4 or 5 years. And it wasn't like suddenly went from retail investor to full-time investor. It was a slow transition. No one goes from suddenly, being employed to a full-time investor overnight. No one like quit their job. It's more literally like a semi-transition now. All right. So back then when I was in uni, my path was a bit different. I was like, by day I was a uni student, and by night I was an online poker player. So I was like doing that for part-time income, and I was pretty good at making money online. So I made I would say my first spot of gold, and from there on, then I started to learn how to invest simply because I got this money that I made from my part-time income as a uni student. So my path was quite a bit different from I would say my peers. So I studied uni and finance, economics and finance. And I guess that gave me a decent, foundation or background into the world of investing also. Like even among my uni peers, we talk about investing, which local company we're going to buy and all that. Yeah. So I think that helps also. Then after I graduated, I continued to play poker and I built up a sizable portfolio. And because of that, then I learned, like there's a lot of ups and downs in investing also. So I slowly honed my skills. And of course, back then when I was young and I thought like, wow, like Warren Buffett takes so long to build up his wealth. I want to have shortcut and all that. Then of course, I also got burned out, like, speculating on penny stocks. So I also have my own shares of battle scars. But I think it's quite an interesting and eventful journey so far. Yeah.
I see. So if you don't mind, can you share with us for the past 4 years, right? How has your life become? Like, I think a lot of people cannot envision how is it like to be a full-time investor? What kind of life are you living?
Yeah. So I was living the work from home life way before it was popular, like before COVID. Yeah. So like so I mean, in a way, like every day I wake up, I will look at my stocks and look at, what are the latest news regarding my companies. So for example, right now, I'm heavily concentrated in Tesla. I'll be looking at Tesla news, specifically on the company, not so much on what the mainstream media is saying. And I also look specifically, like for example, I will have, I would say like chat groups with Tesla investors, Tesla owners. These where I will get a bit more insights into the day-to-day of the companies that are in my portfolio. Then I will also be reading, like learning, be it like watching investing podcasts, or YouTube channels like yours, and also like reading up. So I read quite widely, investing and non-investing topics also. So for example, right now I'm reading this, investing, I'm reading this book, Do You Know It by Christopher Mayer. He is the author of the 100 Beggars. I think it's quite a popular investing books. Yeah, and then non-investing right now, I'm reading this book by John D. Rockefeller. He's one of the richest some in the oil industry. So he wrote this, like, it's more of a compilation of like 38 letters to his son. Yeah. So I thought it was quite a good, like 做人的道理的 kind of like kind of book lah. Yeah. So spend a lot of time reading. Yeah. So to be honest, it's quite a boring lifestyle lah. Yeah. But it suits me because I am lazy also. Like I can I don't like to go out. Sometimes like even nowadays, I once every week I'm going to go out once or twice to meet up with some of my friends or like Tesla, other Tesla investors. Yeah. Just to chit chat. And also at the same time, I also want to make sure that I am not like just in my own space. I want to always meet up, especially like, for example, if I hear like in other investors who have a bearish view on Tesla, I would love to meet up with them too, because they will play a devil's advocate to my own thesis. Yeah, something like that. Yeah.
Wow. I think later on we can have a little bit of debate on
Yeah,
Tesla
sure.
as well.
Yeah.
And I think it's very important that, like what you said, you constantly read. How many hours do you mind sharing? Like how many hours do you spend every day?
I never really. It really depends, but maybe 3-4 hours a day should have not one stretch. So I wake up, drink coffee, clear my messages. Maybe I'll read 1 or 2 hours. So usually when I first wake up, I'm most fresh. So I will read like new content where it's a bit more deep work where I need to absorb. Then maybe towards the night where before I sleep, I will read maybe like more non-fiction, like thriller books, like Jack Reacher kind of books and all that. Yeah, just because I have an interest in it, lah. Yeah, but might not be investing related. Yeah.
Yeah, and I think it's also very important to read non-investing related books because at the end of the day, everything all adds up, right? It's like, and that's what Charlie Munger said, right? Like read multidisciplinary, right? And that's how
that was along the way. I think like back then when I first started, right, I thought like investing is just investing. Maybe financial, like reading a balance sheet or having a bit of accounting background might help. So like within that circle of competency. But how does learning about history, philosophy, human psychology, how does that actually impact investing? But actually it does. So for example, like right now market, it goes in cycles, right? They are great at the top and then they are fail and all that. So all these are just basic human psychology that doesn't change. So having a bit of, let's say you read up and you have a bit of basic understanding on human psychology, it does help, when once enter the market. Yeah.
Because recently I'm also thinking about reading like the history books, right? Because that's what Charlie Munger said, right? Don't focus on forecasts, focus on what happened in the history, right? That's
right. Yeah.
You learn investing the best way. So do you have any books to recommend in terms of the stock market history and human psychology?
I think one book by Ray Dalio, the Changing World Order or something like that. I think it's quite a deep read also, but I think there's a YouTube version of it. He condensed like 40 minutes, his whole book, right, into 40 minutes of like on his channel or something. You can find it online on YouTube. So it shares like cycle goes in, like he talked about the bigger cycles. So the context is bigger cycles. Like for example, every dynasty will have its ups and downs. Before the US was the most powerful, there was the British, and before the British, there was the Dutch, and so on and so forth. And no one country or empire will last more than a few hundred years. And if you look at so this is based on history, right? And if we extrapolate the future, we know that maybe the US, they have been dominant for the last 100 years, and they have been showing signs of cracks and declines. So everyone knows about, China on the up, US on the down. And all these are good to know. So he did share like what are the indicators to spot where, when the decline is like, so along the decline is not exactly like overnight or even a few years kind of thing, but it could stretch over a few decades. So he shared like specific metrics where we can see like where along the curve are we. So that's one. And then another book that I read is Guns, Germs and Steel. But it's even for me, this is quite a cheap book also. How the world is where it is right now, like how the European powers, how do they get ahead, like the European colonies, compared to, let's say, like South America or the South America or the South Africa countries.
If I'm not wrong, I think this book is recommended by Charlie Munger, right?
Yeah. So these are very good books. If one have time to read. Yeah.
Okay. I think later on we can also go back to talking about US and China a little bit. Like how do you actually diversify your portfolio in case anything goes wrong? We can talk about that later. But in the meantime, right, like at that time, I'm also very curious, like what gave you the courage to quit your full-time job?
It wasn't okay. Back context was like, I guess based on what I was doing, even back in uni, like playing online poker and all that, I was also very comfortable going off on my own, like going off the beaten path per se. Even like traveling to a new country, like I don't like to take the like just going the least travel route. So on their own, I do not have like a pressure of like, or a social pressure, like, hey, everyone is doing this, I should follow the herd. Why am I doing this weird thing? I never thought of it that way, but more of I thought about like, hey, am I comfortable doing it? Yeah. And I guess once my portfolio reached a certain size whereby, where you just compound on its own, then you realize like, hey, I only put like, the 80-20 rule, like where I only put 20% of my time and effort and headspace into, let's say, my investing portfolio, but that's 80% of my results. Whereas 80% of my time is maybe working for a company per se, but my salary is only, let's say, maybe 100K. Yeah. And if your portfolio can give you more returns than that, then that begs the question, hey, maybe one could be maybe not full-time yet, but maybe a semi-full-time. Some of my friends, they're also like semi full-time investors, whereby they kind of like reach like certain maybe middle management or whatever, and then they don't want to increase their workload, or maybe they want to reduce their time spent in office actually. So they tell their boss, hey, I don't want to be on your payroll anymore, but I don't mind come back on maybe like consultations, for my expertise like that. Yeah, like per project basis. That frees up their time to do what they want, explore their passions when they are in their 30s, 40s, or spend time with their family and kids. Yeah.
I see. But like what you say, it definitely is not an overnight kind of success.
It's not overnight.
It took many years. In fact, right? You started investing like more than 10 years ago.
Mm.
Like if investors over here, they want to also have this goal to eventually become a full-time investor, what do you think is a realistic time frame to be able to achieve this goal?
Well, it really depends on individuals. I mean, it's a very wide spectrum. But I would say if one is asking that question, hey, should I take the leap of faith or not to be a full-time or not? Then probably that person, he or she is not ready. Like
that's a good one. Yeah.
Ask, then probably might not be ready yet. That's why, hey, should I marry this girl or not? Then probably yeah. So but when you are ready, right, everything will feel aligned, like your heart, your brain, like it just feels right. It's like your gut feel, it feels like the right move to make. But if there's a conflict where you need to, hey, maybe I should not, like there's a conflict within you, then probably not ready yet. Maybe your faith. No hurry. So, I mean, like, you're an investor, right? So what, full-time investor, just the word full-time means what? Like you quit your job and all that. Like, why do you need to, if like you're having a good salary? I mean, you probably climb up to a sizable, and then you're, corporate. I assume one is climbing up the corporate ladder, and you're making a sizable income, 80K, 100K, whatsoever. Then why need to cut off the income stream? Just continue use that money to like save up well, keep your expenses low, and build up your portfolio. Yeah. So back to your question, right? Like, it really depends on how one invests. How one, let's say example, let's keep numbers simple. Let's say one take home 5K, and then you keep your expenses low. Maybe you can invest 2 or 3K every month. It depends on how. There's a bit of luck involved also.
Yeah.
You hit a few good bull runs, right? Like maybe let's say invest in Tesla or even general bull market, then 10x or 5x over the next 3 years. Quite possible. Then your 100K portfolio might become $500,000 already, or 300. Yeah, that might help. But there's a bit of luck factor involved also. Yeah, but maybe over the next 3 years, we could have a severe downturn. Yeah. So it really depends. There's a lot of variables involved. How much money you are pumping in every month, your dollar cost averaging in, then Mr. Market, is it kind to you, that kind of thing, based on how it's performing. Yeah.
Yeah. So coming back to this question of like the market can be very volatile and all this, right? Like, so when you are investing full time, do you actually draw out cash from your portfolio? If not, how do you sustain your lifestyle?
Right. So I also have a few, like, although I'm full-time investor, I also have a few other like income stream, like quite passive income stream, semi-active income stream that cover my expenses. So I don't really have to withdraw my capital much per se. But I always try to keep at least 2 to 2.5 years of operating expenses as a backup. If that I can sustain. So I just always think worst case scenario, like army style, right? Think about the worst thing that can happen and prep for it. So maybe the market over the next 2 years might be down, Tesla might be down for whatever reason. I need to have the time to recover, to let the stock price, sometimes stock price can stay suppressed for a prolonged period.
Yes.
So I need to have that time, and I cannot be like, I sell my stocks at the worst possible time because I need it to buy bread or whatsoever. Yeah. So having that buffer, I think is very, it is a good move to have, which is why, again, back to your question, like I wouldn't recommend anyone, quitting their full-time job to be a full-time investor, because mentally, right, you lost your main income stream. Psychology is you will be very, suddenly like you care more about the market now.
Yeah.
You don't care because you are still taking home 5K, 10K every month.
Yeah.
Like day-to-day livelihood is not affected. But when you only go full-time investor, wow, then like your stress like 10x also. Right?
Yeah.
So,
then how do you overcome it? Like how do you like deal with it for the past 3 to 4 years?
Maybe I guess I was like lucky also, like when I slowly made the transition, Mr. Market was very kind. My portfolio was green all the way every year. It just compounded 20-30% year on year. So like I didn't have like a severe drawdown where I have to really test whether like I can withstand 2-3 years of suppress prices and all that. So I guess luck did play a part in my journey as an investor, definitely. Yeah. But if I were to be talking about this and giving out advice on this, I would recommend to err on the cautious side. Yeah. Like even when you think you're ready to be full-time investor, right? There isn't harm to be a bit more cautious and just give yourself maybe another 2-3 years. Let's say you're making, I don't know, 80K a year for 30 or 35-year-old guy or girl. Like 80K a year, that is 3 years, that's like maybe 240K. You need to take, and to be honest, based on what I see, like my full-time investor friends, right? Most of them, they have something on the side also. Firstly, keep themselves entertained on their brains, and also as a part-time, income stream. So most of them will do consultancy work for their previous companies and all that. Oh yeah, and also a tip, right? If one want to become a full-time investor, right, then it does make sense that one network or know more full-time investor friends. Which is like, because you will then like understand their lifestyle, what they do on a day-to-day basis. Like for example, if I'm a Tesla investor, I will naturally want to hang out with more Tesla investors, right? Yeah, because like, we have a similar similar interests. But as a aspiring like full-time investor, you want to maybe network with people who've been there, done that, who are 2 or 3 years ahead of you in the curve, and you want to chat with them. Hey, what are their challenges, struggles? Their first year they went full time. What was their most stressful period and all that. So that will give you like a prep. Like for example, let's say first time I go uni, then my first year, my freshman. Then I want to talk to my seniors, ask them, hey, your first year, then what are the main challenges you face in the campus? That kind of thing, same. So I think that analogy translates well to everything, but specifically investing. Yeah. So if the people you hang out with are all not full-time investors, then it's very hard for you to make the transition. Yeah, because you don't see it as a normal thing. But once you start networking people, and you realize, hey, actually, like in Singapore, there's a lot of like people who are like just living on their portfolio. Their equities portfolio per se. Then the more you hang out with them, the more you realize that this is not just doable or possible, but actually I can do it on it, because I'm just like them. They also not say very smart, because I know I'm not very smart, but they also like very average people. But if they can do it, then I also can do it. You get what I mean? So you need to hang out more with this kind of people. Yeah,
it's like the environment shape you, right? And the environment makes you see the possibility.
Correct. Yeah, you are the average of the 6% you hang out with most. So like if your 6%, your 6 most favorite friends, right, don't have a full-time investor, then you need to go out of your way to change that.
Yeah, that's right. And I can like, if just a quick recap what we said just now. So how do you know whether are you ready? Firstly, if you're asking yourself this question, most likely you're not ready, right? And the second thing is, I think you can see Rui Ming, he always really think the worst case scenario, right? Which is what Charlie Munger say, always think invert, right? Like what can be the worst thing that can happen? Then that's why, are you prepared for that? Like at least set aside 2 years to even 2.5 years of operating expenses, so that you do not have to be like going through this kind of emotional struggle when the market comes down, then you have to sell away your stocks just to buy bread, right? And also have different side incomes, so that you don't need to liquidate the portfolio for no reason. You still have income coming in, at the same time have an environment of full-time investors network that will really give you a better sense of what is it like to be a full-time investor. All right, fantastic. Now, my next question is, I understand talking about like Tesla just now, you did mention that you are very, very bullish on Tesla. If you don't mind sharing, like what is the percentage allocation of Tesla inside your portfolio right now?
About 65 to 70%.
I see. So
And two-thirds at least.
Two-thirds. Do you build up this portfolio, like do you build up this allocation like along the years, or like how did it go?
It didn't like overnight got to 70%. It started at like maybe started at 2%. Or even less than that. Yeah, when my very first, like when over the last few years, as I learned more about Tesla, my conviction level increased. Because they have, like Tesla, Elon Musk, they have shown that they can actually execute upon what they promised to do. So since they hit their KPIs, so okay, then trust level increased. Then also I feel like right now in the market, they are like head and shoulders above the other tech or growth companies in terms of their right where they are right now in their future growth. So I feel like this opportunity is good. And like Charlie Munger always say, right, like let's say you got this punch card, you can only have 20 companies. I feel like Tesla is one of the 20 companies that I should have, generational company that I should have in my portfolio. Yeah. So the budget obviously it build up over time. I won't recommend anyone jumping in, like for example, using like swimming as an analogy. No one suddenly become an Olympic swimmer overnight. Everyone start from the baby pool, Yeah. So slowly build out the position. Yes.
So when was the first time you purchased your 2%?
About 2017, 2018, if I remember correctly.
Okay. I see. That was like a few years before COVID. And then time, like very few people talk about Tesla, right?
My initial tranche was actually just to I bought like 10 shares or whatever. Back then Tesla was like very low. So 10 shares is and I got in just to so I have this habit once it's in my portfolio, then I will like, keep an eye on it, on the news and all that. And I'm not sure we are going off topic here, but back then, right, I was very blessed to back then Ken, Chicken Genius, we were at this, I forgot which meeting overseas, and then this investors group and then I think he went around and said, hey, let's share your top 3 companies each. So we just go one round like that. And then mine back then was like Visa, Mastercard, and I think Google. And I said, and then he shared, he's like one of his top 3 was Tesla. This was I think back in 2017, 18. Yeah. Back then, like, although I know the company, but I don't know much about it. And Elon Musk is like this weirdo and all that. But then when he said that, because I have a lot of like respect for Ken, he's a very good teacher, mentor and all that. So like, obviously he knows something about Tesla that I do not know. So because of that, then I said, okay, that's interesting. Let me, that was that I would say the start of my journey with Tesla.
I see. So like right now, understand like Tesla has actually run up a lot, and I personally think that even though like Elon Musk has been executing very well, right, whatever promises that he said, he really delivered, right, no doubt on that. But do you think that having a 65% allocation into one single company is a little bit too risky, knowing that the future of EV, just not too sure, right? Can it really come true or not?
I think risk is up to individual to gauge. Like there's 2 ways to go about when it comes to portfolio allocation, right? There's 2 ways to go about. One is diversification, right? You don't have more than 10% or 20% in one company, then you are very safe. But then you have very safe returns also. Yeah, which is fine, which is what most people want, which is the recommended path. So I actually don't recommend anyone to have a concentrated position in any companies unless they really have the experience and they want to, and they feel comfortable with it. Then there's another way of looking at it, which is like, I think Warren Buffett, Charlie Munger, they also say diversification is for idiots. So it's more of diversity. So when you diversify, it's more to protect your portfolio from oneself. Yeah. So for me, I feel based on what I'm seeing with Tesla, I feel very okay having a concentrated position. Of course, I know the risk also. So the worst case scenario, just when we talk about that, is like Elon Musk die tomorrow, and then the day after he's die, his number two die the next day after, that kind of thing. Like, such and all that. Yeah. So we talk about that, having a concentrated portfolio. What is my actionables after that? Yeah, my SOP to immediately after it happened and all that. Like army always have SOP when something happen, terrorist attack or whatever, what's the immediate step? Because at that point of time, emotions are high, no one have time to think. So you need to. Yeah, so for me, all in all, like I feel okay with that. But at the same time, it's not a path that I recommend for anyone. It's a crazy path, to be honest. Yeah. I also feel I need to have a concentrate position in Tesla sometimes. Yeah. But also, there are ways to protect yourself from the downside also. Yeah. Like, so if, for example, like if you have a whole bit of cash or like a willingness to hold cash on the side so that, in case the share price drop, at least you are not like, for example, let's say I could have 60% position in Tesla, but I have 20% cash also. Yeah. So it does help to have a bit of a buffer. Yeah.
Can I say that cash is not your 2 to 2.5 years of operating expenses, right?
No. It's cash in the portfolio sitting there waiting for the like a very severe undervalued situations. Like for example, when Tesla at the start of the year or late last year in December, it hit like $100 plus, that kind of severely undervalued scenarios. That will be a good time to add. Yeah.
I'm also very curious, right? Because like at that time, we know that the Tesla really went through this roller coaster, right? Like, what was your emotion back then when you saw that stock drop to like $90? I think in the period of time it was $90. Like, do you feel like like that kind of feeling? Do you have that, or you overcome that already?
That I guess 多少会有一点yeah, and also because I didn't have such a big swing previously over, say, the last 5 years. And as my portfolio grew, during the COVID bull run, my portfolio grew like quite significantly. And so when it dropped back down with Tesla and other growth stocks, like it was like 7 figures and all that. And that was like the biggest downswing. Yeah. So mentally, yes, like conviction was challenged. I think go back to drawing board and say like, hey, I think there's definitely a bit of doubt. I will question myself and say, hey, did I make a wrong are the fundamentals deteriorating? Did I make a wrong move anywhere? Like there's maybe a bit of second guessing, yes. But these are, then after I go through the process, check this, I realize actually all is normal. It's not just Tesla dropping, the whole general market is dropping because of interest rates and whatever's going on out there. So it was a general market systematic pull down. Yeah. So, but I thought, hey, if everything's okay, then it's a good time to add. I wish I had more cash when it was like $100 plus. Yeah.
So if you don't mind sharing, like what are your mental model, right? When it comes to situations like this, what are, like, for example, you talk about checklists, right? What are the checklists that you will look through to make yourself in check?
Be in a downturn, severe downturn where everything is red, fear is high. No one wants to be buying Tesla, even at $100, right? Then most people will have a question will be like, hey, did I make a wrong judgment? Should I sell? So you have checklist of like if I'm selling, right? What's the right? I want to be selling for the right reason, not the wrong reasons. And you want to be buying more, I want to be buying for the right reasons also. So selling, what are the right reasons for selling? For example, if I make a wrong judgment, if Tesla is not as good as I thought, or maybe it is, but the fundamentals start to deteriorate. So for example, let's say the management, their decision making is no longer optimized for the long term. Nowadays, we see maybe change a new CFO or maybe whatever the culture start to shift and then the fundamentals start to deteriorate, and that could be a reason for selling because it's no longer the reason you bought it for initially. So that could be a reason. Second reason is you need the cash for whatever emergency, non-investing related, your personal life. Somehow there's something happened, you just need the cash. The price you have to sell means you have to sell. Yeah. So selling, but for investing related reasons, you sell when the fundamentals are are no longer as good. So when that happens, right, usually you want to trim your position also. So for example, when the fundamentals deteriorate, it won't suddenly go from great generation company overnight to like worst company in the world. So I might still want to hold a certain position in it, but maybe I no longer want to have 70% concentrated in it. I might want to reduce it to 50. I want to start trimming down my position. So I will start to trim on from there. So that could be a good reason for selling. Yeah.
Just like buying, you go buy. So you can slowly buy, and trimming, you can also slowly trim, right?
That reason for selling is panic selling. That means I sell because of fear. I sell because every day is dropping 10%. I want to, and it's going to get worse, right? $100. Can you reach $50? Definitely next week we reach it. So I sell now at 100, I buy back 50. That is probably not the right reason to sell. Yeah. So as long as there's no downward change in the fundamentals, I do not want to be selling. Yeah, I want to be adding.
I see. Wow.
Right.
And I think just now you did mention that the drawdown for you was like 7-figure. Was that right? Like,
yeah.
Wow, that is really.
So during that period, I think I do what I cannot control Mr. Market, how it moves. I can control what I do. So what I do is try to keep myself sane in that pretty fearful and stressful time. Meet up more with Tesla owners, investors, like 泡在一起哭 that kind of. But like we hang out and then we like try to play, and also Tesla investors, I realize in general are quite independent in their thinking. So like we try to place devil's advocates to whatever is going on to the thesis, and then we come to the conclusion that the thesis is still intact. In fact, right, is like if you look at it quarter to quarter, the numbers are getting better and better. So the share price is going from $400 to $100, but the numbers, they're expanding their factories and all that. Numbers, all the right numbers that we are looking at are going in the opposite direction. What does that mean? That means when people are fearful, it's time to be greedier. Yeah, so you buy more, but buy whatever you can afford, and don't do stupid things like buying on leverage, that kind of thing. That adds unnecessary stress. So so actually, investing is simple. It's really simple, but it's not easy. Yeah. So using strategy like losing weight is simple. It's not easy. Simple means what? The technical know-how is just eat less, work out more. Yeah. 很简单. How to make money investing is very simple. You might not know how to choose individual companies like Tesla, but you can dollar cost average into good ETFs. You will get there one. Yeah, it's simple, right? But might not be easy to do because why? Sometimes they are external influence, like, there's a lot of news out there. Your friend tell you, hey, don't buy now. Now is the worst time, recession coming, inflation coming, US going to war. Like there will always be a lot of all this out there. So it's not easy. It's simple, but it's not easy. Yeah.
And talking about, just now you talk about cash, right? In terms of allocation, do you always set aside certain percentage of cash?
No, I didn't used to do so. I always thought like if I have cash, why not just put it in? But I thought that was perhaps one of the mistakes I made last year. I mean, it's like as an evolution of the investor, I want to be, definitely I'm not the best investor out there. Definitely I'm always making mistakes. So this is probably one of the mistakes I made was that I should be holding some cash so that I can enter. Because last year going into that job, right, I wasn't holding as much cash as I wanted, as I should. So I didn't get to buy as much as I can when Tesla or when general market was severely discounted. Yeah, I think holding cash also helps. So this is the monetary benefit, but it does help psychology. So there's an intangible benefit out there also. When you hold a certain amount of cash, and it differs for individual, could be 10%, 20%. It gives you a psychological margin of safety net, because I know that, I still got 20% bullet. So comes May, I can always, the market you dare to drop, I got 20% cash. I can enter at any point of time, if and when I want to, and I can slowly deploy this extra cash. Compared to if I don't have cash, it makes me feel like I don't have control because I'm out of moves. Do anything. I can only look at Mr. Market and then hope it becomes, because I don't have cash. I cannot. There's no moves left for me as an investor. Yeah, so that is probably so holding cash. Yes, I think is always a good cautious move to have . But then when you hold cash, then you must know that this cash is not hold for fun. It's like not hold like as a symbolic thing, but rather when will the time come for me to use it?
Yeah, you would really use it. You have to use it, right?
Yeah. So and I need to write that out in advance. That means like, okay, so for example, if Tesla dropped to X amount of price, then I will enter 2% of that 20% cash, for example. Yeah. So I will have so my actionables have to be planned out in advance before the time comes. Cannot be when it drop already, then I go and think, should buy now or not? Now Tesla dropped to 235. Maybe can buy, maybe tomorrow. Then it's very depends on my emotions today already. Yeah, so it's a very non-systematic. 靠我的 mood. Yeah, today I'm not feeling good. I'm feeling fearful. Then I buy. I'm feeling greedy. Then I buy a bit. Then it's not objective.
Wow, I really love that. Like I can see that you're always very systematic, right? In terms of your planning. I think Army trained you very well. I think it's poker trained you very well, because I know people who play poker, they always think very systematically and they think in bets, right? Like which bet will give them the optimal ROI, the lower probability of losing and all.
Okay, so actually I actually feel like my poker days does give me a bit of edge, because poker and investing is very similar, and a lot of investors they play like even Charlie Munger and Warren Buffett, they might not play poker, they play bridge. Yeah, so all these games, right? It puts you in situation where you have to make risk reward decision. So you're thinking based on probabilistic, there's no 100% certainty. You always have to make decision based on there's a random like uncertainty involved. Yeah. So I guess it does help lah. And to like for example poker, when you have good cards, then you want to bet big. But when you have bad cards, then maybe you bet small. Yeah. So when for example, if I see a generational company like in Tesla, so I want to be betting big. No point I put 5% on my portfolio, then okay like 10x, I still make money, but then it's like waste the opportunity. Yeah. So sizing lor. Yeah.
Interesting. And if you right now, what you learned from last year, that you think that cash, you could have at least set aside more, right? So one more thing that we talked about just now was like how can a cash is one of the way to protect yourself against the drawdown, against volatility, and another way to protect our ignorance is to have a portfolio, right? So what's your view on like with, for example, Ray Dalio, he talked about the rise and fall of different nations, different power, and with China like seems to be on the rise while US going down. Do you personally think that it's wise to diversify in other countries?
I think it's okay. Like if there's a good opportunity, why not? So like a conservative portfolio can have like maybe, I know, equities in US equities, like your blue chips, US blue chips, and then some China equities like Alibaba, some local like your STI, you want to buy DBS Bank, no one will afford you for locking in 6% dividend or whatsoever. Yeah. So a diversified portfolio, I think is okay. Like if you feel comfortable with it lah. For me, to be honest, right, I am not at the level where I know how that, like the changing world order, how does that play out to the markets, like over, let's say, a next 5-10 years time frame. The impact would be minimal. There's a high probability that based on my estimate, there's a high probability that the impact is minimal, or there's like zero impact at all. You know, like this could be 50 years down the line for all we know. We're talking about 300-year cycles, not the cycles. Yeah. So how does that impact? I don't know. If one does not feel comfortable having too much allocation in US companies, then it's okay to lower that percentage. I feel like I guess most people are thinking like worst case scenario, like, you know, US, China go to war, World War III, then like the stock market go to shit for the next, as long as for however long World War III takes, like maybe 5 years, that kind of thing. So we need to base again the probability of that happening. So there's a worst case here, but the probability of that happening over the next 5-10 years might be 0.001%. Whatever percentage you deem it. Yeah. So is that a big enough percentage to worry about it?
It kind of reminds me of what I read this morning about The Joys of Compounding. I really love that book by Gautam Bay. And he talked about like great investors, Warren Buffett, they don't care about the interest rate and whatsoever, right? They what they truly focus on is the fundamental of the business.
Right.
If
So
the fundamental of business still is good, then just hold on to it.
yeah, I subscribe to this school of thought also. So to translate your words to layman, right? Like don't care about the macro, the interest rates, how the recession is doing right now, or which stage of the recession we are in right now, but care more about the companies that you are invested in or want to invest in. So that is where I feel like my thesis on Tesla makes a lot of sense. Like this Tesla, there's a lot of like qualitative traits. Like they fulfill all the good traits of a good company or a great company. So as long as all the checklist of that is checked, then who cares about what's going on there? Long run, a good company, they will continue to execute well, and the share price eventually will have to reflect the outstanding business, right? And if you are really a long-term investor, then it might take a while, 3 to 5 years or however long. And if over the next 3 years, the share price doesn't move north, it's actually good because as long as the business keep improving, there's your chance. Like for example, like just talk about, okay, maybe 6 months ago, Tesla share price was also from 400, also dropped to about 230 right now. But this 6 months, the share price is the same. But the company over the last 2 quarters might have improved quite a bit. Yeah. So all in all, like, I feel, yeah. So just focus on specifically on the company fundamentals. You won't go that wrong. And for most investors out there, let's say there's like 100 participants right now, most of them might not have the time because they got a full-time job, right? So, and after that, they still have commitments, their family, all that. They might not have time to do that. So one way is like go the ETF route, exchange traded funds, where you have a basket of all these quality companies. You can't go too wrong also, or hybrid of both. So for example, you have maybe 30% in SPY, 30% in QQQ, and then 10% of your own specific, your individual choosing, because you want to have, you like to choose your own companies also, but kept at 10%. So it could be Tesla or Palantir or whatever companies you like. Then maybe another 20% on China companies. Then there is quite a diversified portfolio already.
I see. For yourself, do you like also diversify in other asset class apart from equity?
Properties, but recently I also.
Oh, wait, am I lagging or is Rui Ming lagging? Oh, I think you just lag a little bit.
Oh, okay, sure. Yeah. Yes, I do, but I would say right now I am quite like 90% concentrated in equities. Yeah, not so much in other asset classes. Yeah, crypto a bit, but more for like a diversification against the fiat currency. Yeah, that's about it. So mostly equity because I feel like it's very liquid and it allows me easy to go in and out if there's a need to.
I see. Yeah. And I think like some of our participants are also very curious, like for Tesla, do you trade or you just buy and hold?
Do I trade? I think I do a hybrid of both. Sometimes I do trade in and out of a small. So I have like what Chicken say, like do not touch portfolio, and then the one is like EG portfolio where I sell covered calls, sell puts on them. Yeah, that kind of thing, just to keep myself entertained. So I think that is very. I think it helps psychological. Like, because like as an investor, sometimes if you just buy and hold, you do nothing, then you sometimes hand EG. So you need to have a hand EG allocation where you want to trade the hell out of it also can. Like, so for me, could be I look at the chart. So sometimes I used to trade more often last time. Now, but once a trader, always a trader. So sometimes I see the chart, I feel like got breakout. Either to the long side or the short side, and I might take a long or short position. Yeah, might not be Tesla, might be other companies also. Because I can trade anything. Or sometimes I could like, if I feel the price is a bit too on the high side, like when you reach like 280, I could sell some cover calls on it. Yeah, when it's a bit like at the 240 support, I'm in selling puts. Yeah, the shares . Yeah. So I do that. But that's not to say that I recommend you do. It feels comfortable for you. If having an EG portfolio like helps you to don't touch your main portfolio, right? Then why not?
Yeah. But the EG portfolio will be a small percentage as compared to your long-term holding, definitely.
Percentage. It's just like your, let's say we talk about a diet. Yeah. So you eat clean every day of the week. Sometimes you also say you need a cheat day or a cheat meal, right? Yeah, or a cheat snack. So once in a while you eat ice cream. I think it's fine also. Yeah. So for me, it's like my yeah, my cheat meal or like cheat location, something like that. Yeah.
And I think Chiwa also asking, your long positions, or does it include, I think mainly is shares and then a little bit of options, right?
Options, sell puts, cover call. I do not have that much like buy call, like leap calls. Yeah. No, because I feel okay, where we are right now, the market have run up quite a lot this year. I mean, it's a recovery, it's a bounce, but tech stocks are up like what 30%. General, we could talk about QQQ. Tesla obviously more. Over the next 6 months, if you ask me, there might not be a lot of upside. Yeah, so I don't feel there's a need to have like buy calls like right now because it's speculative trade and I'm losing the time decay with options. So like maybe now is not the time to be like risk on mode now. Yeah, now is still a time to be defensive, accumulating. Yeah.
Very good. And SK is asking, do you buy to average the cost? Like right now, like with 65% portfolio inside Tesla, when opportunity come, you will even consider adding some more. Will you?
So I guess for most people, like if you're dollar cost averaging every month, you have a plan to do that. Like you buy, you can make it systematic. So that means you take guesswork out of the equation. You buy on every Thursday, every third Thursday of the month, for example, regardless of the price, you just buy. Whether it's green or red that day, you just buy. That's one. If you want to have a bit more TA, a bit more technical, a bit more guesswork, then you can only buy when it reach like 50 MA. So you pull back to a certain support levels, then you buy all at one shot, that whatever you accumulate, and then you just hold on to it. Then you just keep storing cash until the next time it drop back down to the 50 MA or the EMA 20 or whatever is your support. That you yourself set up. But you need to set this in advance so that there's no guesswork. So you want to keep it as systematic and as non-emotional as possible.
Yeah, I see.
So you can both but it really depends on whichever is more comfortable for you
I see. And I think okay, so Chiwa, I think is very interested in your itchy hand portfolio. Do you use options such as spread or like
no, I don't do vertical spreads. I don't sell. I feel like it's in the long or maybe I'm not a very good vertical spread seller. I feel like my age as a vertical spread seller is not you cap vertical spread, like you cap is a your risk reward is fixed There's no, and in the long run, unless you have certain age in it, like for example, okay, you see a bounce, so that's why you are selling a vertical spread, and you are selling, instead of just selling put, you are capping, you're doing a spread so that your margin requirement is capped at maybe $5 wide or $10 wide spread. And okay, I think it's fine, but I personally don't do it. Yeah. But of course,
Yeah, and I think I just want to wrap up this interview with the last question to Rui Ming. Like, what is your, like, after these decades of investing, like, what's your, if you can only have one advice to all the investors out here, what will be that advice to help them to become better?
General advice. Let me think. Very hard to just think of one advice. I think continue to keep learning. Might not be the advice you guys want to hear, but the power of compounding not only works for your portfolio, like it goes from 4 figures, 5 figures, 6 figures, 7 figures, but it also works for your learning. So whatever you're in investing or reading, it stays with you forever. This knowledge, this skill set, your circle of competency is always expanding, and it will definitely help you. Like over the years, whatever I learned in investing, I think it will help me to spot the next Tesla sooner. Yeah. So I have an edge. When the next Tesla come along, I am ready. You know what I mean? Compared to maybe 7 years ago where I am not as good. Yeah. So always keep learning.
Wow. I think that is very beautiful. Like what you said, right? Knowledge compound, and it's like a skill set. Once you hone this skill set, you'll be able to respond and in fact anticipate the next investing wave or whatsoever. And I think that's really awesome. Thank you. And if people want to find out more about you and your work, where can they go and find you?
I seldom share like videos or record videos nowadays. Just more lazy. But sometimes I still do like posts or share my thoughts on market updates or my views on Tesla, their earnings calls and all that. I got an investing channel on Telegram. I think the channel name is Invest with Rui Ming. Yeah, you can just search it on Telegram. Yeah, that's the link. Yeah,
I put the link inside the chat. Yeah, it's Rui Ming Invest. Yes, thanks so much for the sharing. And yeah, I think Rui Ming, he really put in a lot of thoughts in whatever things that he does. So you can see that from his own way of describing his whole thought process, you can see that he is a very, very thoughtful and systematic investor. And if you follow his Telegram channel, definitely you will understand more about his thought process as well. And together with him, continue to level up. And I also hope Rui Ming can start posting more so that more people can get to learn from you.
My best.
You try your best. And in the meantime, okay, for those who have not followed my Telegram channel, you can also choose to follow me as well. t.me/Alligator Investor. Right. So for me, I am more general in terms of investing. I'm not like super 100% bullish on any single company, but I think my investing thoughts come from, like, for example, I do a lot of reading in the past, I think since 1 year ago, trying to catch up with Rui Ming. And yeah, I also thought share what I learned today inside my Telegram channel as well. So for those who want to learn, yeah, feel free to follow both of us as well. And thank you so much, Rui Ming, once again for being here.
Thank you. I enjoy my time.
Yeah. I enjoy learning from you so much. And let's catch up again. And thanks everybody for joining us tonight as well. Hope you guys learned a lot and continue to learn, continue to stay invested, and let's have fun in our investing journey.
Never stop learning.
Never stop learning. Exactly. Thank you, everybody. Have a good night. Thank you.
Hey guys, thanks for joining the session.
See you.